According to the U.S. government-required disclaimer, you should carefully consider whether trading is appropriate for you in light of your experience, objectives, financial resources, and other relevant circumstances. Trading does involve potential risk, and that potential is greater if you're using leverage. Never trade with money you cannot afford to lose. And always trade with a stop-loss order on the floor. As a middle-class person, this is your issue. Will you be able to maintain your lifestyle in retirement? The answer is probably not. You'll find out why in a moment. You're here because you want to create income. You want to generate capital. And that's the first step in creating wealth. You have two ways of making money: a person at work or money at work. Find a way to create money, put the money at work, you become wealthy. Wealth is created by design rather than by default. When you don't have your money handled, you don't have your life handled. This is why you probably won't be able to retire on time and on budget. Most of us are middle-class people, and they've had a target on their back, specifically targeting their money by two forces. One is Clown Street, known as Washington, D.C., and they want your money, taxes. Then you have Fraud Street, known as Wall Street, which wants your money in high fees and put you into vehicles that they know are not going to make you money. They're very good at what they do. They're so good that you must take control of your financial future. 33% of the middle-class Americans don't expect to be able to retire before age 80. 25% of middle-class Americans are tapping into their retirement accounts to pay bills. 66% of Americans aged 45 to 60 plan to delay retirement. Further, facts that matter: 45% of all Americans have $500 or less in savings. 77% of all Americans are living paycheck to paycheck at least some of the time. 1 out of every 4 workers in the United States bring home wages that are at or below the federal poverty level. More than 100 million Americans are enrolled in at least one welfare program run by the federal government, and that doesn't include Social Security or Medicare. And 49% of all Americans live in a home where at least one person receives financial assistance from the federal government. Back in 1983, that number was less than 30%. So you can see the odds are stacked against you retiring on time and on budget. Question is, do you want to retire on time and on budget? Most Americans are realizing they're never going to retire. Procrastination is expensive. When creating wealth for retirement, you want time on your side. The more time money has to work, the faster it can grow. So the sooner you begin investing, the greater wealth you accumulate. And that enables you to take advantage of the secret of the wealthy, the benefit of compounding money. Einstein called it the most powerful force in creation. This will give you an idea of the cost of procrastination. Let's assume you postpone for 2 years, and you start with $10,000, and for 25 years you get an annual rate of 10%, and every month you put in $500. It's going to cost you just under $119,000. Now let's start talking about some real money, money that's available to someone who's successful at trading. You postpone for 5 years, and now you start with $50,000 over 25 years at 10%, and you put in $2,000 a month. Cost you just a little bit over $1 million. As you're going to see, this is chump change compared to what it really costs you if you don't know how to control your money and put it to work for you. Here are the 4 steps to financial independence. First, you need to develop trading skills to the point where they justify forming a corporate entity. In other words, it's financially feasible. This will increase your cash flow. A corporation is another secret of the wealthy. The government very generously gives you ways to avoid their taxes. Once you have a corporation, you can establish the grandest of all retirement plans, a defined benefit pension plan, where your dollars are tax deductible going in and they're tax sheltered while they grow. Now that you have money and you've structured your business, now you need to structure it in a way that your assets are protected. And then you'll compound your money, which will enable you to retire and live the life you love. There is a solution. You follow the money, and everybody tells you follow the money. Price and volume, the only true leading indicators, enable you to follow the smart money. When you follow the smart money, you make money, and that enables you to retire on time, on a budget. You'll be joyful. The How to Create Income solution. Trading any market using the secrets of price and volume. You can create the wealth, freedom, and lifestyle that you deserve. I can help. I'm uniquely qualified to do so. I passed the bar in California in 1976, and I found out about the Employee Retirement Income Security Act that was passed in 1974. So I was right there at the inception of the retirement revolution. And I quickly became a defined benefit pension plan expert. I catered to the retirement, business, and estate needs of high net worth individuals in West Los Angeles. So I know what people have to go through to structure their business and their lives, the ups, the downs in their businesses, what it takes to retire on time and on budget. 25 years ago, Richard Ney taught me that markets are nothing more than merchandising mechanisms run by thieves who do their absolute best to separate as much money from as many people as possible in the least amount of time. The markets were set up to transfer money from the many to the few, from amateurs to professionals. So they're very good at doing this. That's why you had the statistics you saw. Who am I and why should you listen to me? That's me in Malibu, California, at a restaurant called Joffrey's. I first went to Malibu in 1959. I'm born and raised in Los Angeles, second generation. A novelty at best. My cousin's house was on Malibu Road, so I was doing the lifestyles of the rich and famous long before Robin Leach found out who they were and where they went. This happens to be a picture taken in winter, so I have long sleeves on and long pants. My normal costume is shorts, a t-shirt with a Hawaiian shirt on top of it, and Rockport walking shoes. I drive a classic convertible in the convertible capital of the world, a white-on-white Mustang with a red interior with under 87,000 original miles. Starting in 1984, I began watching Richard Ney discuss market merchandising on the local business channel. Then in 1989, I began to learn to trade in the trenches along with the Ney report and his scheduled telephone updates. To show you the difference in the markets then and now, if the Dow was up or down more than 50 points for the day, there'd be a special update if one wasn't already scheduled. And in 1990, I was taught by Richard Ney about market merchandising. I began with a TV table, a Quotrex, which is a handheld device, works off an FM antenna, 6 inches by 3 inches by a half inch. Had a screen and a place to text. For a little over 8 years in the live market, where the big girls play, I mentored S&P day traders. You should listen to price and volume because they tell you the truth. They're the only true leading indicators, and therefore you're trading on facts. And trading on facts will enable you to succeed. Speaking about success, this will show you that the method is tradable. It's not what I can do with it, it's what others can do with the methodology. And it is teachable. This comes June 12th, 2014. I'm recording this on July 18th, 2014. And he talks about, first, the support is unparalleled. He's just done 12 trades using the method. 10 out of 12 have been winners, 83%. He thinks one could be pretty happy with that. And then he says the methodology speaks for itself. So this is powerful information you can immediately start applying. Why? Because this is how those who take the most out of the markets position themselves. Price and volume show you how to protect your investment. That's one of the secrets of the rich and famous. First thing they do is protect their capital. They love to live off of interest, not principal. This information will enable you to create new money and grow your long-term wealth. Price and volume works in any market in any time frame. Doesn't matter whether you're a day trader, doesn't matter whether you're a position trader, doesn't matter whether you're trading 3-minute chart or 10-minute chart, doesn't matter the market, currencies, stocks, bonds, metals. Price and volume works in any market, any time frame. To show you others' sense of the value of this information, this was an email from 2013 where he has received in A-Books most no-nonsense and useful information he has ever found. This is from John Bollinger, the creator of Bollinger Bands, and he says he believes that the most important key to understanding this dynamic balance is volume. So truth is not afraid of inquiry. What is your lack of education costing you about money and wealth? It's costing you a lot. First of all, as you're going to see, the cost of not avoiding the crashes of 2000, 2001, and 2008. So you got to be honest with yourself, because the world is not honest with you. The world loves hypocrisy. I repeat, time is of the essence. Money loves speed. So you need to act. No action, no results. Price and volume is a license to print money. Here is another beginning trader. This is June 12th. So you see I started class at the beginning of June. And he talks about the stock that his buddy who's been in the market for 5 years asked him about. He said that the price was going to go up, but the prosperity trading student said that the price was going to go down. See, I looked up the chart on my phone and told him it was going to go down. And here's the end result of what the mentee saw. And as he said, small amount, big accomplishment. This method is teachable for those that are willing to receive it. Why should you avoid every future crash? Let's take a 64-year-old who followed the buy and hold experts and gave their money to the mutual fund industry, which was a product of the revolution in retirement. Say that person in 2000 had a $1 million pension plan between their contributions and their growth. After the dot-com bubble burst, the market lost 80% of its value. They now have 200,000. And between 2003 and 2008, whether you use the Dow or the S&P, they roughly doubled. So that 200,000 became 400,000. But we had a crash in 2008. Market lost 50% of its value. Now let's see what happens if you avoid the crash. If you got out with a minimum of 85% of that $1 million, you only gave back 150,000. You had 850. So when the market doubled, you had 1,000,007. You again kept 85% of that. You now have $1,445,000 versus the 200,000 that our person listening to the buy and hold experts, listening to Fraud Street and Clown Street, they have 200,000. Those that use the best trading strategies have a minimum of 1,445,000. And when the market bottomed after the 2008 crash on 3/31/2009, that was the low. This was the high. It's 3.5 times. You can do the math. We're now talking about having $5 million, and that's just doing what the market did. Nothing more. If this goes up 3.5 times, it's now $700,000. That's what it's costing you not to have money and wealth education. And that's the minimum. Increasing your net worth. It's not only what you make, but what you keep. This was step 2 in the 4 steps to financial independence. Wealth creators treat trading as a business. Whatever creates money needs to be treated as a business. Your financial independence and security demands it. So the largest expense a trader has is taxes. Every dollar paid in taxes is one less dollar to put to work for you. As a reasonable, prudent business person, you have an obligation to do everything possible to keep as much of your money in your hands. And money likes speed, money likes to grow. Back to tax sheltered, not paying taxes, avoiding taxes. Here's a case for trading futures. As we're talking about taxes. As I said, I'm uniquely qualified. This is what I did as an attorney. I help people to effectuate their intent, minimizing and avoiding their taxes. The money that you're trading outside of sheltered plan, this is why you would trade futures. This is what Clown Street and Fraud Street enable the select few to do. They don't want you to know these things. Futures generally receive a 60-40 tax treatment. So equities require a longer holding period for favorable tax treatment. So here's an example. Trader A makes $10,000 in profits over 1 week trading Intel. Trader B makes $9,800 in profits over 1 week trading the E-minis. Which trader would you rather be? Assuming they're both in a 39.6 tax bracket. You know the answer, and it's big, about 12%. This is what Trader A pays, but Trader B, who knows the ins and outs of money, he trades the futures, and consequently, he only pays $27.28 in taxes, $1,232 on $10,000, as I said. Normally, futures are going to give you 12%. He did this in a week. Do this for 52 weeks and compound it. That number is staggering. Unbelievable number. Take it for checking. Truth does not mind inquiry. The math will do itself. Okay, we talk about making serious money. And so if you're serious about making money, trading gives you that opportunity to make serious money. In the disclaimer, I talked to you about how much to risk. We'll go through a little exercise here, and this is something you can use immediately. Here is a 20% cash on cash. This is in a matter of 3 hours. We're talking in the S&P. Here's the S&P 3-minute chart. You're risking $80. That's 2% of a $4,000 account. So that's the margin that you would use. The S&P went up 17 points at $50 a point. It's $850. I'm going to throw out this $50 to make the math easy, and because commissions were paid. So that's 20% cash on cash. Can and does happen on Fraud Street. Back to, it's not whether I can do what you just saw, can others do that? So here is June 21st, 2013. He started the course a week before that. He's talking about 413 pips at $10 a pip is $4,130 profit. All he's got to say is, wow, this is amazing. For years he struggled to pull a meager 50 pips out of the market in a single month. That's $500. Now he did this in 3 days. Same trader. Now this is a fill from his account. $6,720 in profit. He thought he'd share this week's trades. Alone are going to pay his moving expenses, and you add this up here, $6,720. What if you did that on $20,000 margin? He did this in 2 days. It's very exciting. Become a speculator. It pays to develop these skills. So is trading really that difficult? If you're an amateur here on Payne Island, it definitely is. But when you make the transition and you cross the line into being a professional, you go from Payne Island to Pleasure Island. So is trading really that difficult? The difference is what professionals know. The merchandising process. This is what Nay taught me. The merchandising process. This is how simple trading is. It's nothing more than this. Anybody tells you it's different than this, you need to separate yourself from them as soon as possible. They're not telling you the truth. So we start with accumulation. Professionals buying at wholesale down here. From there, we then move price up when accumulation is done. They have an inventory objective to raise price because they bought lower at wholesale. Now that price is rising, it will attract demand. So this is another big thing. We can write this down, use it. It is not demand by amateurs that cause prices to rise. It's rising prices by professionals that cause amateurs to buy. So this is what happens. They distribute their inventory at a profit, but now they've created demand and there's no inventory left to meet that demand. So price has to stop. And since they have no stock or no other investment vehicle, whatever people are trading, because they've distributed all their inventory, they now have to do short selling. So that's why markets go sideways at tops. So now notice what they do. They drop prices again, and it's not amateur selling that caused those prices to fall here. It's professional selling that caused prices. So now they cover at wholesale what they sold at retail, and then the whole process starts all over again. This is all the trading is. Nothing more, nothing less. Trading is simple. It's people that make it complex. Price and volume more than levels the playing field. You don't have to get an advantage unfairly. Price and volume gives you an unfair advantage in a fair manner. This is Richard Ney's car, and I point you to his license plate. Price and volume in this webinar, God willing, are waking you up. I've seen it again and again. Remember, I did planning for high net worth individuals for a long time. And I've seen it time and again in the same environment with the same surroundings and opportunities. Two people will manifest in entirely different ways. I'm hoping that this webinar causes you to take action. Whether you take it with me or somebody else isn't what's most important. What's most important is that you wake up and you take control of your financial future. Who was Richard Ney? My mentor, my inspiration. He was the foremost authority on market manipulation by insiders. He managed money for none other than J. Paul Getty, the richest man in the world when he died. Ney first gained the national attention in June 1962 when a Time magazine cover story singled him out as having publicly called the 1962 stock market crash. In fact, he called every subsequent crash until his death in 2004. And in 1963, he revealed a little-known congressional report by the SEC that stated insiders had control of the markets, and particular control at openings and closings, which are typically the first 90 minutes and the last 90 minutes of the trading day. The game's rigged in favor of those who control the market. Richard Ney said he buys when other people are selling. And that's exactly what professionals do and amateurs don't. Go back to that slide that made the market simple. They were buying at wholesale when amateurs were selling. They were the people selling. Ney's buying like the professionals. Two sides of the trade. This is the flyer that I got in 1990, and I took his class, and he had quoted in one of them in which it's shown, and I love this. This is so cool. In which it's shown that if you scrap traditional approaches to the market and attack, operative word, attack the financial conspiracy with its own weapons, you can beat the stock exchange insiders at their own game. Concentrate on that for a moment. That's key. Attack them. As I said, you have a target on your back, and that target is your money. So you've got to take control. You've got to strike back if you want to retire on time and on budget. Lucky Luciano. He's the father of organized crime in America. After a visit to the floor of the New York Stock Exchange, he said, "A terrible thing happened. I realized I had joined the wrong mob." So follow the trend. Market manipulation has happened since the inception of markets. Here's Daniel Drew. He was one of the guys that was a robber baron. And in his memoirs, he stated, anybody who plays the stock market, not as an insider, is like a man buying cows in the moonlight. Then Richard Wyckoff. He was a tape reader, just like Ney was a tape reader. So he said, listen to what the market is saying about others, not what others are saying about the market. Rely upon yourself. Rely upon price and volume. Price and volume tell you what professionals are saying about the market. And Ney said, like exchange insiders, you must only buy on declining prices. You buy wholesale, you sell retail, you sell on rising prices. Here are the challenges that most wannabe traders are facing. They're trading in hindsight, not foresight. Wannabe traders want to see that the trade works before they get in. And so they wait for it to work, and then they get in thinking it's a sure thing, and they are getting in on a sure thing, a sure loss. The easy money was already made. They're following the media. They're relying on so-called experts. Nobody cares about your money more than you do. You don't need them. You just need to know when news is coming out. You don't need to know what it is. You don't need anybody else's opinion. That was part of Ney's whole purpose. That you were independent. Most people trade on emotion rather than discipline. They don't plan to fail. They fail to plan. They don't have a methodology. Or they have a quick, rich mentality. And you don't get rich quick. It's a process. It takes time. But once it's started, and as you saw, once you have some money, then it grows exponentially. But you're going to have the money first. And most wannabe traders, they'd rather be right than make money. And they don't trade with stop losses, or they cancel their stop losses. Doesn't work that way. Here's some common myths. It takes years to learn to trade like a pro. Well, I've just showed you a couple, three testimonials of people that right from the get-go, they're figuring it out. Traders requires an MBA or other college education. Nonsense. The market doesn't care if you have a pedigree or not. It doesn't care where you come from or who your parents are. The market does what it does, and either you know how to make money from the action or you don't. You don't need to follow the companies you trade. Trends are not hard to determine. Trading is not an exclusive club. You don't need a lot of money to invest in the market. And you don't need to sit in front of your computer all day long to do it. All myths. Everything you see on this page is false. They want you to believe this because they don't want you doing what they're doing. They don't want you to retire on time and on budget. They don't want you to be successful. They want your money. You're not profitable yet because of a failure to take responsibility. A failure to use consistent analysis parameters. Do the same thing 10 times. Don't do 10 different things. Back to failure to limit losses. Trading with stop loss. They don't protect their money. Got to know when you get into a trade how much you're willing to lose and accept it and lose it. Everybody has losing trades. They don't determine market direction. They don't get educated. You think education is expensive? Well, you've seen what the lack of education costs people. And people make trading more complicated than it is. Simple. When you know how to read a chart, you'll trade like a Wall Street professional and create the wealth and lifestyle you deserve. You'll consistently take money out of the market. You will dramatically improve your trading results. You will achieve your income and retirement goals before you ever thought possible. As well as trading like a professional, you'll be able to create and protect your wealth. You'll make sound professional trading decisions. You'll benefit when the market goes up and down. And that's one of the coolest things that ever occurred in making money. The market allows you to make money when it goes up or it goes down, and it goes down 3 times faster than it goes up. So if you know how to short, and if you know how to buy, you know how to short because it's just a mirror image. You can make money faster when it goes down than when it goes up. And where else can you do that but in the markets? So you'll be able to take control of your financial future and you'll stop being a victim of what you don't know. So markets are rigged, and that is a great thing. Pattern recognition is the first thing that they taught me. And when elephants walk across your front lawn, they leave footprints. Here's some footprints. There's something else you can take. News creates volatility. Now that's another bugaboo, another myth. They want you to be afraid of volatility because they don't want you to make money. Volatility makes money. Makes a lot of money. So here, this is 5:30 Pacific time, and that's when the news came out. This is a Japanese yen, US dollar. It's a currency. And you see the news came out, jacked the market up here, and you can see that the market put on top. Here's another fallacy. High volume is not a continuation pattern. It tends to be a reversal signal. And here you had high volume. Volume's decreasing as price is going up. Notice what happened to price. It got up here. It couldn't stay up here. It closed down off the high. Then the next bar did the same thing. But now, this dot tells me that there's no interest in professionals to take market prices up. And prices fell precipitously in a hurry, in a half hour. Any market, any time frame, this is the stock market. And this is the S&P. And this opens at 6:30. News came out earlier at 5:30. This is a close at 1:15 the day before, so we don't have the overnight. You don't see that 5:30. Market gapped up. Any market, any time frame. Why price and volume? Pattern recognition? Because all the major trading fortunes have been made by taking advantage of the smart money. It's the line of least resistance. Pattern recognition trading, following the footprints of the pros, is simple. All you need is a price and volume chart. That will dramatically improve your trading results and transform your life. Here we talk about stopping volume. And when stopping volume occurs, what you're actually seeing is professional accumulation or distribution of the inventory. So look here, this is 2011. And we go all this way here. Look at over here the high volume and how it ended up being stopping. Look what happened here when we got into this level above the yellow line. Bottom. Look what happened here, a bottom. Right here, a bottom. High volume. This happened to be an uptrend. Every time you had a decline in prices and volume got high enough, prices turned around. So somehow you can apply here. Don't be a victim of what you don't know. You know this now. Here's gold stopping volume. Look at that volume on this bar. Price had to move $150, a little bit less, but roughly $150 to absorb this volume. It had to do it for the better part of a month. There's some insight right there. Here's Forex volume. When you get into the red light district, I call it, when you're above this moving average, high volume, the bottom put in. They won't fool you ever again. This is the bottom. See it by the high volume. The principles are always the same. The only thing that changes are the disguises. Understand the real underlying mechanics that move the market and do not be influenced by the news, rumors, tips, or analyst forecasts. Everything you need is contained on the price and volume chart that you're using to trade the financial instruments of your choice. We talk about leverage. It's either your friend or your foe. The wealthy use leverage properly. The get-rich-quick mentality use it to their detriment. Over-leverage is self-sabotage. So margin is leverage. If you don't know price and volume, you can never risk more than 1% of your account. Price and volume trader, you can risk 2%. Never over-leverage. You get in trouble in a hurry. Real fast. The brokers, they don't care if you over-leverage. They're just out there to churn and burn you. So think, protect capital first and profits second. Capital preservation. Stay in the game. If you lose 50% of your capital, you need 100% to break even. So again, I say never risk more than 2% on any trade. Here's another principle. You trade, not invest. Look at the difference here. Buy and hold, buy and sell. Want market to go up, want market to move. The traders don't care if it goes up and down. They only care if they're going in the right direction. Traders manage their own money. Investors, amateurs, trust others. Hold 2 days. Hey, you can hold, you saw a half hour, 20 minutes, 3 hours versus this. Investors are looking at saving versus creating. Where is your mind? What are you holding in mind? This is poverty consciousness. This is lack. This is want. And these people, they'd be lucky if they got that. Where if you're a true trader, you saw a trade that made 20% in one trade, so you know that when you develop the skills, this is possible. You got to use a systematic program designed to create profit, which is what price and volume does. You have to have confidence in your own decisions, which you do. You paper trade for a while, you see price and volume work, you learn the patterns, you see that they work, you have confidence in your decisions. Opportunities come along, boats, trains, planes, you miss one, there's another one coming along. It's the beauty about the market. Always a market to trade, there's always opportunities to make money, every day. Back to protecting yourself. When your decision is wrong, exit immediately. With that stop on the floor, it'll do it for you. You got to do the homework ahead of time. Once you have a system, it's a formula. The number one tool for traders is price combined with volume. They're the only true leading indicators. And volume is inside information. The vast majority of it comes from professionals. So volume when analyzed with price action gives more information than any other indicator period. Here's price and volume in action. Here you're seeing that stopping volume. Well, price is going up and professionals are short selling in here to amateurs. And these dots are telling you that pros are not interested in taking prices up. So peak prices here, no more amateur demand. Then they go sideways here. Look at this bar here. Opened, came up, found resistance in a logical place and closed in the middle of the bar. And it did it on increasing volume. It had to be selling on that bar. This bar here told you to look for a place to get short. This bar confirmed it, gave you permission to short, and voila, Price just fell beautifully, as you would expect it to. Here's another chart. Now, I'll take you into something different, but first of all, look, we had a bottom put in here, and notice the high stopping volume here. Then they come out here. This is all distribution, selling, short selling to amateurs. And look what happens up here. These are order flow lines. It takes skill and an art form to draw these. They happen to be where amateurs and pros are exchanging money. These solid lines were drawn previous to the day that I drew this picture. And you can see how these lines were foresight. They told you logical place. If you wanted to short, this price here was a great place to look to short if price and volume gave you permission to do so. And look at this. Then once the market was in a downtrend, I put arrows of the places you could sell. On up bars, notice they're blue bars. Blue bars are up bars. Red bars are down bars. So the broken lines here I put in prior to, say, 9 o'clock here. And you can see as we went out the rest of the day, they work. Price and volume. The footprints of the elephants are left on the charts. It's a matter of being able to read them. You remember the old westerns and trackers. That's all you're doing is tracking the elephants. Is this teachable? This is a Forex chart. This is a guy I mentored in 2008. He did this annotation. I did not. This is his chart. It's not my chart. He did this on the Forex, on pound, dollar, 5 minute. And here he's talking about this was no demand by professionals. The volume was decreasing. Here he sees a weak bar on increasing volume. Must have been selling, so he decided to short here. 30 pips. It's $300, $10 a pip. For whatever reason, he's not involved here. Comes back to the market here. He sees a downtrend, weakness in the background with no demand. He shorts this weak bar, another 20 pips, another $200. Downtrend and weakness on the background, very weak bar, another 30 pips. That is $800 he made in this one-day trading one contract. He did it. I didn't do it. He learned to trade the S&P in the live market. He applied it to another market. That's what he made in one day with one contract. 10 contracts was $8,000 a day. Same guy Shamit. And this guy had told me he had spent 8 years getting to the point of meeting me. Between losses and books and software, he claims he spent $250,000 to get to this point. Now he gets here, day after day, he's able to take money out of the market. You saw what Mark did 6, 7 months apart. Once you learn it, nobody takes it away from you here. So here there was news. There was a rate cut. Look what it did. Push prices up. But here we had a bar of weakness. These PD dots, you gotta ignore this dot here. This ain't no supply dot, but not with this weakness in the background. They're ignored. It's actually a party dot here. Short the open, 20 pips profit. And you see he likes these 20 pips here. First blue bar increasing volume, he shorted. Another 20 pips here. He had a short here for 20 pips, but he missed the trade. Another one's coming along. It's no big deal. So right here, he made $400. Off of the news, volatility. Here's a guy who was a successful trader before he met me. I mentored this person in 2003, 2004. He said that I showed him more about the market than anyone else ever had. So if you were tired of wandering around the backside of the desert trying to figure out how to trade, this is your chance to finally see how the market really works. It's really quite logical if you know what to look for. That's what I'm saying. It's very simple. He said that he's heard it all. The only way price and volume can fail is if you fail to use it. Once you understand how professionals manipulate prices, you'll be able to recognize their patterns, duplicate their actions, and achieve extraordinary results. The principles can be used in any market: stocks, commodities, futures, ETFs, Forex, options, and any market time frame. You gotta wait for the right opportunity as a trader. Professionals buy at wholesale where demand exists, and they sell at retail where supply exists. So you buy when professionals buy. That's what they did. When amateurs are selling, professionals are buying. Sell when professionals sell, when amateurs are buying. Do what the public won't. Stay patient and be disciplined. Wait for your opportunities. We talk about serious money. $17,000 serious money in 1, 2, 3, 4 days? What if you traded with $17,000 of margin and made 100% on your money in 4 days? This was the NASDAQ. It's a daily chart, any time frame. I've been showing you other time frames, other markets. Okay, now we got a daily chart here. Look at this bar of strength. I call it Sophia because it's so beautiful. After Sophia Loren. Here, volume increasing, pros for buying, price closed well off the low. Now here's a very profitable move by professionals. Notice how they took prices just below the low of this bar here. They know amateurs are selling here. See, amateurs want to be right rather than make money. They want to be sure that this is going to keep falling, so they wait till price falls below here, and they got in on the sure thing, the sure loss. So here you had a beautiful winner and $17,000 margin, $1,700 a point, 170 points, 4 days, 100% cash in cash. What if you cut your margin in half? Not telling you to do it. What if you doubled it? You made 50% of your money. Serious money. If you're serious about making money, the markets provide it day in and day out. This is leverage. This is what rich people know how to do. This is futures. It's not cash on cash. You can't do this. You can't take control of your financial future. You can't change your relationship with money. I have fun trading. This is interesting. Ray sought me out. He was trained by Ed Seykota. You probably don't know who Ed is. Ed is mentioned in the first Market Wizards book. Ed's notorious for taking a small amount of money and turning it into tens of millions of dollars, when tens of millions of dollars was equivalent to $500 million or $1 billion today. Ray was part of the tribe that would go to Lake Tahoe to Ed's house. Ed couldn't teach Ray how to trade. This is what Ray said. Last year through remarkable faith, he met me. I introduced him to the concept that markets are manipulated, market merchandising as I label it, how specialists, insiders, professionals call them what you like, make the big money. They move markets so they can buy low and sell high every day in every market in all time frames. Now he has fun. How many of you have fun? How many of you find this effortlessly? Easy. Making money is a lot of fun. While I extract money from the market, he trusts himself to trust the system because he's learned how to exploit the telltale sign of the market manipulators, then leaving them on the charts. Once you learn what to look for, it's really easy. So they're both saying this, and they don't know each other. Ray didn't know the other trader. Adam had an epiphany. I had to beat him over the head with a 2x4, but all of a sudden, 22 out of 24 winning trades. So the time is now. You know what worked 150 years ago works now, and it's going to work 150 years from now. I showed you a picture of the robber baron and how he quoted in his memoir. He actually talked about a run on the greenback, which was $1 and it meant shorting. So only you can take control of your life and create the wealth you deserve. Nobody cares about or will take care of your money better than you. If not now, when? When you know how to read a chart, trades will find you. How cool is that? You just look at a chart and you can see what you're supposed to do in moments. You don't have to go looking for trades. You don't have to sell anybody. You don't need another customer. You just need for the market to unfold to make the decisions for you. So you can change your relationship with money. You can make money, you can protect it, and you can grow it. And it's done in that order. When you join today, here's what you get. There's 10 modules and 14 different videos. How the market works from the inside. You gotta know the truth. Then you can follow the patterns. Mindset. Mindset is what separates winning traders from losing traders and big winning traders from little winning traders here. Mindset is the difference. You take a great system and a lousy trader, they'll lose money. Take a lousy system and a great trader, they'll make money. So next you get 19 essential trading concepts that lead to your success. It's like a foundation. Next we get into the sequence of pattern recognition for duplicating professional results. This is the Ney diagrams. You're actually going to see what I saw in 1990. These diagrams he drew by hand. I've updated them, made them a little bit cleaner. You'll see what I saw. This is all about Ney. Then we go what to trade and how to identify the best trading instruments. Not all horses run equally. Not all horses can run in every race. Then we're going to talk about placing stops, how you protect, what your profit targets are, what the order flow levels are, how to determine these, and sometimes they're simultaneous, they're inflection points. Then we get into how to read the chart in two parts. I know people can only focus for about 25, 30 minutes, 40 minutes at most, so I've limited these to about 40 minutes, stopped, and then did a second part. Same thing with the trading process, same thing in how to trade gold, and last, how to exploit the power of compound interest. That's where money grows exponentially. Be in love with that. You also get the best trading strategies quick start guide. This is actually a 5-minute video. I break it down. I give you a trading plan. You write it down. You apply this every time you look at the chart. You make money. This will ensure you stay on track for rapid growth. You're also going to get the definitive guide to price and volume, which I wrote. It's the most concise, effective, and simple to follow guide to price and volume. With this guide, you'll be trading like a professional in the fastest time possible. And it's only 16 pages. Make things simple and straightforward, easy. 8 pages are me describing what you need to know about price and volume, and 8 pages are quotes from Richard Ney. You're also going to get the Abundance Success Library, Think and Grow Rich by Napoleon Hill. It's created more millionaires than any self-help book ever. It was ordered by none other than Carnegie. Carnegie asked Napoleon Hill to write this book. So these books, The Day Trader's Bible to Wyckoff wrote that. We mentioned Wyckoff. He's a tape reader. And then you have the basis for the movie, The Science of Getting Rich by Wallace Wattles. All these things have to do with mindset. And Reading Price and Volume by Wyckoff. You're also going to get some bonus trading. I've recorded 4 live webinars. This is for the first month of membership. And the last 2 of those recorded actually go through the definitive guide, me reading parts of it and amplifying, so you get into my head, you get into the nuance of it. You're also going to get a copy of the Ney report. This is going to show you, prior to us going into Kuwait, that Ney said that when we did, the market would skyrocket, and it did. So this will teach you how markets love war, and that way you knew in 2003 when we went to Iraq, put everything in the market, you were going to make money. The market ran straight up for 5 years. So you're going to know exactly what the professionals do. The only thing that changes are the alibis. As I said, it's always the same. It's just the disguises, and in this case, the alibis have changed. Walton, who took my course is comprehensive, covering everything from trading concepts to real trading action. He was in the $5,000 class that had 14 live sessions, real time. So he'd recommend me, and he's talking about in the time that it takes you to learn it, that it's saving you 900 hours. So the benefits of membership: once you understand how professionals manipulate prices, you can recognize the patterns, duplicate their actions, achieve the same extraordinary results. It doesn't matter whether you're totally new to trading or if you've been trading for years. Best trading strategies revealed will help you quickly develop your trading skills. You'll not only gain the know-how, but also the confidence to trade like a professional. And the principles you learn can be used in any market: stocks, commodities, futures, ETFs, options, currencies, and in any time frame. You find a market, a way to trade for you, you make money. It's practical, hands-on training that you can apply immediately. So we're back to the start here. Will you be able to maintain your lifestyle in retirement? Probably not, unless you know how to follow the money. And again, everybody tells you follow money, but they don't tell you how. Price and volume show you how. And then you make money. Then you're happy, and then you live the lifestyle you want. I happen, as you can tell, to be a beachy kind of guy. So retirement to me, joy to me, is being at the beach. Whatever's joy to you, put that picture in there. Your investment in your future is only $997, and you can become the unlimited success you deserve. You can take advantage now of this opportunity to learn to trade with the market makers. And you've seen that procrastination is very expensive. One trade could cover this investment in yourself and your future. Here's an oil trade, and this is a daily chart here. Here, each dollar move in oil, a barrel, is worth $1,000. So this is $13,000. I said you can use the tightest stops in the world. This is a 2-cent stop held in entering on this buy signal here. And what did it take? It's the beginning of March. Okay, 2 months. 2 months to make $13,000. Consequently, if you use the margin of $13,000, it's 100%. But what if you use a margin of $6,500? What's 2 cents of $1,000 in the move here? As you can see, the money is unlimited that you can make. Here's a $3,000 move. Here's a buy. Here's one of those Sophia bars. This was a 23 cents. So that's $230. This was a $20 stop that held here. This is a $230 stop. Here's a gold trade. Here's the E-mini gold. Here you had a sell. Here. This was $39.80 move in gold and $33.20 on the mini gold. Per dollar move, that pays the $9.97. And how did that move pan out? What was it really worth? $2,370. Here was that sell. Right up here at the price we talked about, here was that $1,300. Here's another market covered itself. This is Forex. Here's a continuation of that trade. The secret is to want what the market wants. Learn to read charts like a professional. Price and volume are the only true leading indicators. Trade with foresight, not hindsight. The price and volume method is how the market is designed to work. So you have a choice. You can be part of the many or one of the few. So don't wait another minute. Now that you know how you can become a successful trader, start today and I'll help you create the wealth and prosperity you deserve. The promise is you take the time to use the program as instructed, your life will change dramatically. The only way trading program can fail is if you fail to use it. So the low investment of only $997 in yourself, it's really simple. After you understand how to do this and you're a position trader, you only need 30 minutes or so a week doing it, about 5-6 minutes a day. Bring up your charts. Look at your charts. See what they're telling you. Exit trades. Move stops on trades. Enter trades. When you do, you'll discover ways to achieve the success you're after faster and more easily than you ever dreamed possible. You have that choice. You can be part of the many or one of the few. So click the button on the right and get started today, and I'll see you on the other side.